is not a price-sensitive economy right now in the least. And I don't know exactly how when it shows up in different price indices, but there's more inflation going on than quite a bit more inflation going on than people would have anticipated just 6 months ago or thereabouts. It's an economy really. It's red hot. I mean, and we weren't expecting it. I mean, all our companies when they thought when they were allowed to go back to work, at our various operations, we closed the furniture stores. I mentioned, they were closed for 6 weeks or so on average, and they didn't know what was going to happen when they opened. And they can't stop people from buying things, and we can't deliver them. And they say, well, that's okay because nobody else can deliver them either, and we'll wait for 3 months or something of the sort. But the backlog grows, and then we thought it would end when the $600 payments ended, and I think, around August of last year. It just kept going. It just won't stop. People have money in their pocket, and they pay the higher prices. And when carpet prices go up in a month or two, we announced a price increase for April. For our costs are going up. Supply chains all screwed up, for all kinds of people. But it's almost a buying frenzy, except certain areas you can't buy yet. You really can't buy international air travel, and so the money is being diverted from a piece of the economy into the rest, and everybody's got more cash in their pocket except for. Meanwhile, it's a terrible situation for a percentage of the people. Everything is off of interest rates. And when you get to negative interest rates, if a country can borrow at negative interest rates, you get into something that's kind of akin to the St. Petersburg paradox. And those of you who want to go to search, you can find some interesting things on it. But it becomes infinite. It's a crazy consequence of a bunch of abstract mathematics where you get there. But you lose gravity entirely. And if you tell me that I'm going to have to lend money to the government at minus 2% a year, and I'm talking nominal figures, not you're just telling me how I'll go broke over time. if I do that, so it pushes you to do other things. And of course, we've seen it. Well, we saw the rest of the world do it in even more extreme fashion, but nobody. Paul Samuelson, brilliant man. Nobody thought you could do this, and we don't really know what the consequences are. But we know there are consequences, obviously. When Jay Powell acted as he did, that was incredibly important. I mean, I should say the Fed acted as they did, but they with speed and a decisiveness on March 23rd that changed a situation where the economy had stopped. The government bond market was even disrupted. Berkshire Hathaway probably could not have gone out with a debt offering the day before. There was it didn't get a lot of publicity time, but there was a run on money market funds, a very substantial run. And if you look at the numbers, daily numbers on that, it was a repeat of September 2008. And this time, I give great credit to what Bernanke and Paulson did, but this time the Fed knew that saying whatever it takes and saying it and demonstrating it, which they did on March 23rd, they took a market where Berkshire couldn't sell bonds on the day before and turned it into one where Carnival Cruise Lines or something could sell it a day or two later. And there was, it's record issuance of corporate debt and companies losing money, companies that were closed, whatever. It was the most dramatic move that you can imagine. And at the time, as I remember the chairman saying, how about a little help on the fiscal front? And then Congress acted very, very big. Again, in 2008 and 2009, they argued about, we don't want to give any money to those dirty banks and all that sort of thing. But this time, there really wasn't anybody to blame. So they saw what was necessary, and Congress responded. So you had fiscal and monetary policy that responded in a way that was incredible, and it did the job. On March 31st, I ran off a list of the 20 largest companies in the world by stock market value. And those names, a good many of which will be familiar to you, but they were led by Apple at slightly over $2 trillion. And it went down to the number 20th was worth 330 odd billion. But those are the 20 largest companies in the world by market value on March 31st. Make your own guess. How many of those companies are going to be on the list 30 years from now? Here they are, these powerhouses. And how many would you guess are going to be on the list? Well, you know, it's not going to be all 20. It may not even be all 20 today or tomorrow. This was March 31st. But what would you guess? And think about that yourself. Would you put on 5, 8? Well, whatever it would be, I would now invite you to look at slide 2, or L2, which goes back a little more than 30 years, and look at the top 20 from 1989. And if you look at the top 20 from 1989, there's two things that should grab your interest, at least two. None of the 20 from 30 years ago are on the present list. None. Zero. There were then 6 U.S. companies on the list, and their names are familiar to you. We have General Electric, we have Exxon, we have IBM Corp. I mean, they're still around. Merck is down there at number. None made it to the list 30 years later, zero. And I would guess that very few of you, when I asked you to play the quiz a few minutes ago, would have put down zero. And I don't think it will be zero. But it is a reminder of what extraordinary things can happen, things that seem obvious to you. Japan had this wonderful bull market for a very long time, so you had a number of Japanese companies on the list. Today there are none. And the United States had the 6, now we have 13. But they aren't the same 6. I would invite you to think about one other thing as you look at this list. 1989 was not the dark ages. I mean, we weren't just discovering capitalism or anything else. And people thought they knew a lot about the stock market, and the efficient market theory was in, and it was not a backward time. And if you look, the top company at that time had a market value of 100 billion, 104 billion. So the largest company in the world, title, in just a shade over 30 years, has gone from 100 billion to 2 trillion. At the bottom, the number 20 has gone from 34 billion to something a little over 10 times that. Well, that tells you something about what's happened with equality, which is a hot subject in this country. It tells you a little bit about inflation, but this was not a highly inflationary period as a whole. But it tells you that capitalism has worked incredibly well, especially for the capitalists. And it's a pretty astounding number. Do you think it could be repeated now that 30 years from now that you could take 2 trillion for Apple and multiply any company and come up with 30 times that for the leader? You know, it seems impossible, and maybe it is impossible. But we were just as sure of ourselves as investors and Wall Street was in 1989 as we are today. But the world can change in very, very dramatic ways. And I'll just give you one other example you might ponder. This is when you start feeling too sure of yourself. One thing it shows, incidentally, is that it's a great argument for index funds, is that the main thing to do is to be aboard the ship a ship. They were all going to a better promised land. You just didn't know which one was the one they'd necessarily get on. But you couldn't help but do well if you just had a diversified group of equities. U.S. equities would be my preference, but to hold over a 30-year period. But if you thought you knew a lot about which ones to pick, or the person that you had hiring, you were paying a lot of money to, had all these ideas, and they could tell you their best ideas in 1989 did not necessarily do that well, although overall equities were absolutely the place to be. The airlines were the most prominent beneficiaries of what took place immediately. They got $25 billion initially, most of which went to the big four airlines, and some of which went in as grants, not loans. I think that was fine public policy. I was wishing it could go to every restaurant and dry cleaner and every small business that really was out of business and had no. I mean, they were made toast of, basically. But the airlines, clearly, what happened was not their fault in any way, shape, or form. It wasn't like 2008 and 9 when people blamed the banks and hated to see them help. So it was. Now airlines operate in bankruptcy, so it isn't like the three of the four big ones went through bankruptcy within the previous 10 or 15. So the airlines that were kind of used to operating in bankruptcy, they would have kept operating, but it was perfectly proper for the airlines to be helped. The entire airline business, you look at these figures of $2 trillion for Apple and so on. The entire big four airlines, they sold for about $100 billion almost. I mean, it's a very, very small. Combined, they wouldn't come close to making the cut. I mean, they wouldn't be in the top 50. I think the airline business has done better because we've sold, and I wish them well. But I still wouldn't want to buy the airline business. International people really want to travel for personal reasons, and business travel is a tougher thing. And we've got a big exposure to business travel, of course, through the fact that we own 19% of American Express, and we own Precision Castparts, which services the air business very dependent. So we've still got a big investment in air travel, a big commitment to it. But we wish the big four the best, and I think their managements have done a very good job during this period. I like banks generally. I just didn't like the proportion we had in it compared to the possible risk if we got bad results that did not. So far, we haven't gotten. So we were over 10% of Bank of America. It's a real pain in the neck, both to the bank and more to the banks than to us if we go over 10%. There's just a whole lot. And I like the Bank of America. I mean, I like Brian Moynihan very much, and I like the banking business fine. So we took that up, but we took the overall bank position down. We didn't want to go above 10 in any of the others, and we did want to increase the B of A position, but we overall didn't want as much in banks as we had. We like the banking business is way better than it was in the United States 10 or 15 years ago. The banking business around the world, in various places, might worry me, but our banks are in far, far better shape than 10 or 15 years ago. I recommend the S&P 500 index fund, and have for a long, long time to people. And I've never recommended Berkshire to anybody because I don't want people to buy it because they think I'm tipping them into some side. Never. I mean, no matter what it was selling for. And I made it public. On my death, there's a fund for my then widow, and 90% will go into an S&P 500 index fund and 10% of Treasury bills. And on the other hand, I'm very happy having my future contributions to a group of charities that will be spread over 12 years or so after my death to stay in Berkshire. I think the odds are Berkshire, Berkshire is, yeah, I like it, but I'm not. I do not think the average person can pick stocks. We happen to have a large group of people that didn't pick stocks, but they picked Charlie and me to manage money for them 50 or 60 years ago, and so we have a very unusual group of shareholders, I think, who look at Berkshire as a lifetime savings vehicle, and one they don't have to think about, and one that they'll look, if they don't look at it again for 10 or 20 years, that will have taken care of the money reasonably well. But that, I wouldn't argue that the S&P 500 over time. I like Berkshire, but I think that a person who doesn't know anything about stocks at all and doesn't have any special feelings about Berkshire, I think they ought to buy the S&P 500 index.
Alright, thank you guys for watching. I hope you learned something new today on investing. If you enjoyed the video, make sure to destroy the like button, and as usual, if I missed anything, drop it down in the comment section below. And if you're new here, please subscribe for more videos and real investing advice. Check out some of my other videos from my investing playlist where I talk about the most important topics and teach you what to do. So, until next time, stay the course and keep investing on a regular basis.